Hey guys, it's Matt here with Forex Successful Traders. We had a lot of good questions in the trading room, and so I wanted to come on and talk about something that's specifically been coming up throughout the week, and it's all about trading confluence. Now, there are two types of confluence. You can have indicator confluence, so multiple indications on one time frame. That basically gives you a high probability area to take a trade. And the second type of confluence is confluence of time frame. So you have the same indicator on multiple time frames, and they match up, and gives you, again, a higher percentage probability of a trade or the price responding to that area. I'm going to talk about the second type, the same indicator across multiple time frames, how we view it, and actually how you can make decisions based on that. The indicator that, as some of you may know, and again, this is going to address specifically some of the members, and also I think a lot of you guys that are using maybe some other indicators or other methodology can apply the same principles and get the same result, which is a more consistent trading style. So the first thing that we'll talk about here is the 5-minute chart. And I want to bring this up, make it large, and just talk about this for a second. And what we're looking at here is dynamic Fibonacci. Now, we want to take this indicator, study it, look at it, and see trading opportunities, and then apply it to other time frames and see how we can use the same information to give us higher probability trades across multiple time frames. So again, here you see that price is responding to these levels, coming back, testing it, testing here, forming a channel between these Fibonacci ratios. Once we break, we'll run to the next one, break, run to the next one, respect it again, and so you can see that these levels are respected with a very high degree of accuracy here on a 5-minute chart. So what we want to do is take a look at the same indicator on another time frame. We can take a look at a 15-minute chart. You can see that price is respecting these levels well, and there's action or energy in the price around these levels. You can predict with a high degree of accuracy where the price is likely to stall, stop, or reverse. And we can take a look at a 15-minute chart and see that, again, it's respecting these Fibonacci ratios with a high degree of accuracy. Now, when we apply this to a 60-minute chart, you're going to see the same result, where you have price that follows these. It, again, is picking the tops and bottoms of these levels of where price is responding, as we have right here. Get into a little bit of channel, and then mainly just our price action's been revolving around this level on our 60-minute, and we can come out here to a 240. Again, look at everything. The price has responded each of these. 240 is a little bit longer time frame, so you're going to see a little bit of overshoot, maybe undershoot. Again, we're primarily we start with the foundation of shorter term and go outwards. So nonetheless, we look at it, and you can see here, the price is responding to these levels. So how can we easily identify these levels at once where we can make a trading decision on a high probability area to enter a trade? And that's what I want to talk about, and how this actually relates over to your matrix, so that we're in the trading room and we're talking about specific levels, you're able to see it and, more importantly, act on it, whether we're guiding you into the trade or not. So I'm going to take a look at euro dollar, and again, I don't have a euro dollar pulled up here. What I can do is just bring up the 1-minute chart, the indicator here, and we see a 65 and a 13. So if I were to look at a euro dollar chart, I've got my 65 and I got my 13 right here, and you can see on a 1-minute where price action has basically been revolving around this indicator as well. So it works on a 1-minute as well. Now, you don't see these middle levels because, again, those of you that are obviously with us know this is the active zone. This is a little bit more subjective. However, our passive trades are very rule-based, and what you're going to see is you see this 65 level, and the 13 level is displayed right here in your 1-minute time frame column. If we bring up the 5-minute chart, you're going to see we have a 12 level, and we don't have anything displayed in the top level, and I'll show you why. Here is our 12 level right here. Now, the one that would be on the edge of our matrix here is at 59. Our passive area is right here at 60, so we're not quite able to show that. But again, we have good confluence on a 1 and 5 minute time frame right here at 13 and 12 in accordance to this Fibonacci, dynamic Fibonacci indicator. Now if we want to bring this over and take a look at the 15 minute, I can pull this open a little bit more. Now we see here on the matrix we don't see anything on the 15 minute. Now we have levels here, it's just some are inside our active zone and some are out of the range. We just don't see them on the matrix because they're not within our view. But again, we can see here that this 29.59 is just a pip away from being shown here in the passive zone. And if we notice back on our 5 minute there's an actual level of confluence here. We just can't quite see it. Maybe if the zone moves down a couple of points, it'll show up here as I'm doing this video. So again, I can come out to my 60-minute chart, a little bit longer of a time frame, a little bit spread out, got a little bit more space where I can kind of see where the price is in relation to these Fibonacci zones. And I can look here at my 29.79. You can see that I've got that right here in my 1 hour column, and I also have our 29.09, which is down here to our buy side. So again, we're ready to play the market in either direction. If the market drops, we're going to be looking for buying opportunities from this 13 level to this 9 level, and we have 3 time frames of confluence with the same indicator, which responds with a high degree of accuracy on each individual time frame. So naturally, what happens when you have these levels of confluence with multiple time frames is you have a much higher probability setup. Okay, and we can do the same thing for the 240-minute chart here. Again, 78 right here matches our 1 hour time frame, and we don't have anything to the buy side. It looks like it's quite a bit lower, and we don't see it quite in the view. So again, this is one aspect. This is, again, more of a choppy, range-bound market indicator that works really well. It can work real well in trending conditions too, but the main thing that I wanted to talk about for members is that you can see support and resistance above and below the price. You don't need to predict which way the price is going to go. You can let it move, and when we hit these high probability areas that the price is going to reverse, that's where you can initiate your trade and use the proper management, and you know that you're in a trade with a very high degree of accuracy. So I hope this was helpful. I hope this explains some of the stuff that we've been going over in the trading room. And for those of you that are going to apply this to your own trading, I hope it helps. And what I'll try to do here in the coming weeks, I'll try to get into some of the other things you're seeing here, such as the PMDs or the price movement direction indicators, and how we can then add another layer on top of this and gauge momentum and direction to a market. So again, guys, thanks for taking the time to watch the video, and I look forward to seeing you in the next. Take care.